Hi, I'm Joseph Kim. In this week's Video Insights, I'll be talking about the recent performance of the retail sector and how a reopening of economies may impact retail share price performance. It seems like a distant memory, but once the initial panic of COVID-19 subsided, there are some clear trends that were established as a result of the wide-sweeping lockdowns, leading to some notable COVID-19 winners. While an acceleration of tech dominance became clear to most people early on, what was less obvious was how average incomes would increase with the unprecedented government support that we saw globally. This has seen the retail sector become a major short-term winner out of COVID-19. The trend, known as a higher share of wallet, has led to a significant increase in spending on goods, while services and eating out at restaurants and cafes and travel were naturally restricted due to the coronavirus. It's easy to see in hindsight how this may be the case. For example, in a normal year, spending on household goods is about 17% of total retail sales, while cafes and restaurant spending is about 14%. However, spending on household goods surged during the COVID months by over 20%, while cafe and restaurant spending declined by more than 25%. The change in spending has allowed for companies such as JB Hi-Fi, Harvey Norman and Super Retail Group to post sales growth exceeding 30% in July and August. The big question for investors is how the retail landscape is impacted going forward, as some government support begins to roll off and the economy goes back to normal and services spend starts to increase. It may also be necessary to differentiate between what is likely a pull forward of demand and what may be more sustainable in the future. For example, some stay-at-home winners, such as home office spending, is likely to be a pull forward of demand as we expect consumers to spend less on their home offices after their initial purchases. However, other areas such as clothing and apparel and footwear may be better supported as people spend more time outdoors and look to renew the wardrobe. While most analysts expect the recent surge in sales to moderate, the coming weeks will be an interesting test to gauge market expectations for these companies, especially as consumption data shows a slowing of spend in retail goods in favour of services, especially as the weather gets warmer in Australia. That's it for today's video blog, and remember to follow us on Facebook and Twitter.